look, how long can the overall economy stay as robust as it is? We talked about the unemployment numbers today being strong, but there are cracks out there, like the collapse of the food company Sara Lee that's gone into administration. Otherwise, though, many are holding up. Deloitte Access Economics has just put out its latest economic outlook, and partner David Rumbens joins me now. David, many thanks for your time as always. There's a big question. Is there a brick wall in front of Australia's economy, in front of consumers and in front of business right now?
Well, right now there is, to be honest. Most of the indicators are pretty poor. If we look at consumer confidence, it's very fragile. It's near its all-time lows. If we look at the rate of consumer spending, retail spending is actually at its lowest point in the history of the series in terms of retail growth over the past year. And as you've just noted there, business failures are on the rise. Retail, manufacturing, particularly the construction sector. So if you're inclined to worry, there's a lot to worry about right at the moment.
Okay, just explain to me though, you're worried and yet you look at numbers like the unemployment rate today coming down, you look at home prices moving up. There are other pieces of contradictory evidence out there that suggest there's a robustness out there that is a bit unusual after you've had as many interest rate rises as we've seen.
Yeah, so I mean, let's have a look at those. The unemployment measure, the unemployment rate went down, albeit on soft employment growth. We only had 6,700 jobs created in the month. Now, if that continues month after month, then the unemployment rate will track up. So, we've seen in the labour market, we have seen some softening. It's just not really coming through in the unemployment rate. It's in the underemployment rate. We've seen job vacancies go down. So it's perhaps not as rosy as that headline figure would suggest. If we look at house prices, that's not necessarily related to buoyant demand. It's probably more a supply story, just a lack of supply and the supply of population growth coming through, starting to push up prices. So I think both of those still mask some underlying weakness at the moment. But they do suggest, we are in a business cycle, and it's, while things are tough for many at the moment, there are areas that are likely to improve once we get to 2024.
Okay, so the Reserve Bank has talked a lot about productivity growth, the fact that productivity growth in Australia has stalled, and that really is causing real problems in terms of higher wage outcomes, but also, therefore, real issues in terms of driving the economy forward without creating inflation. So, where does Australia get this productivity improvement from?
Well, look, that is exactly what we need to support economic improvements going forward. There's a lot of opportunities, particularly from technology. So we're seeing a lot of interest around AI. A lot of companies are looking at it, starting to invest money into it, particularly in the US, but also in Australia. That could be pretty significant in driving productivity gains. Closer to home, there's the energy transition agenda. That is going to require a lot of investment. That investment, will be put to good use and could, help the restructuring of Australia's economy to help drive productivity gains as well. Of course, we need government to encourage those processes, and that includes encouraging competition and lifting the rate of innovation in the business sector.
So just an interesting one. I mean, you say that the signals are negative for our economy and for many businesses right now. And many people can see that the first interest rate cut is not until late next year. Just explain that cycle and how long it's going to take to wind out.
Look, it is a business cycle, and we're probably, pretty close to the low point now. And then once you're at the low point, we expect things to start picking up. So what are the drivers going to be? In part, it's population growth, which has been a story over the past 12 months and continues to be pretty strong. That is going to, already is, and will continue to lift demand. The other thing that we might start to see or expecting to see going forward is a lift in real wages. Now, we've had 12 quarters in a row where real wages have gone backwards, and that's unprecedented to have such a long period of reduced real wage growth. We're likely to see, even with a slightly stronger CPI print, we're likely to see real wages have grown in the September quarter, And we expect that will continue in the December quarter and going into 2024. So real purchasing power is going to start to increase. Now, consumers are a long way behind. They've had those 3 years of real wage declines, but we're at the turning point where that is expected to start turning around. And then as we go through 2024, that's, will start to come into play.
I'll tell you what, David Rumbens, always good to get you on the program. Many thanks for your time today.